In this video, traders, we're going to look at 5 things you should not do when you've missed your fill. Stay tuned. Hey traders, warm welcome to you. Alright, so I missed my fill pretty recently and we're all human. You think, oh, so frustrated, I've missed the fill. What do you want to have the urge to do? Plenty of things. What should you not do? Here's 5 of them straight away. So let's have an example of what we're talking about. So market's kind of chopping up and down. It rallies up. You think, right, well, I want to get long on a pullback, for example. Could be the other way around. Could be anything, to be honest. You think, okay, well, let's kind of have a look and see where it is. Well, if we pull back sort of halfway, that's probably what I'm after here. I recognise that it might be quite bullish, and so I'm going to stick a limit in on this level. Market then comes along, you leave it, and you've got to stop it, and you've got your limits, and you've got your brackets in. It's the kind of thing that you've done and you've left. You're not actively watching the tape. You've analysed the price action. You've decided you want to go long on it. Everyone's happy. Whatever the thing may be, you come back later and you see this has happened. You come back, you see, right, you've missed your fill by 10, 15 ticks. Sometimes, guys, it's 1 or 2, and that really one is someone's turning the knife. But you've got to fight the urge to do these things, and I've been here and done that, and I know that this is never in my best interest. So despite wanting to do something to make it better and get that, well, it would have been a great trade. It went up 300 ticks or whatever it is. Not quite 300 ticks in that case, it's like 120, but you'd been up really nicely. If it had just gone a little bit lower, and you feel these different emotions. And the first thing that a lot of people do is to go, right, well, it's obviously very strong, I'm obviously correct, I'm going to go market, I'm going to put a market order in. Or they, watch it for a bit, and then maybe they see it going and going and going and going and going, it's pulling back, and they go, right, well, it's obviously just so strong, I'm going to go in. And they don't look at the analysis of the whole picture, and perhaps it's running out of steam because it's already come up quite a lot, it needs to unwind a bit, and so they just, out of frustration for not getting on board it, they just go in and hit the market, and inevitably, we know what happens, guys. It kind of then comes out, pulls back down. They probably haven't got a stop in place. You probably haven't managed the risk effectively. You've not decided where the exit point is, and then you sit and then it comes all the way back, and you're like in a big loss you don't want to be in. Out you go, and then it goes off again. We know that's the kind of worst thing we can do. And number 2 is trade another instrument. So, well, there's a bit of a caveat to this. Often you see that you go, well, I've missed that. So you might then go to something similar, like, well, I'm going to go and look at gold, or I'm going to look at NASDAQ, or whatever you're trading. And then you try and quickly find a trade in there. There's a theme here of trying to quickly find another trade to undo the error of this. And that's what we've got to fight as traders. Got to kind of say, no, just remain focused with it. We'll come to that in a second. So not skipping on trading an instrument. By all means, if you're trading, let's say you're trading stocks, or you're trading a basket of instruments, different markets, by all means then go, you know what, I've missed that. Let me shut that down for the day and see what else is about. I've got other things on my watch list. That's different from just knee-jerk trading another instrument. Number 3, move it. Now, I'm gonna do another video completely on moving your limit when you don't get filled under the right process and how to do it, because you've got to have extra checkboxes in place for it. But this is the knee-jerk reaction again of saying, right, well, I'm just going to move it, and I'm going to move it right up here. Now, if you've done the analysis, and again, we're going to go into depth on this, so I don't want to cover it too much in this video, but if you've done analysis and you've moved it based on new price structure, that's fine. But it's the impulse again. It's like, well, I'll just pull it up to here, I'll just move it, and you're not analysing. The amount of analysis that's gone into this was probably quite a lot. You've decided your risk is quantified, everything's very structured around the trade, and then when you're just moving something, you're like turning one knob, i.e. the entry price, without looking about where your stop could be on that, where you are in the day, you're on the back foot. Then you're fighting against your emotional wanting to trade, as opposed to the logical, systematic approach that you should have done, and we've probably done for this, and you've literally just missed out just because that's the way it is. Number 4 is flip bias. This is another one. Your price has gone up, and let's say that this is what we've got. We've gone up here, you've missed your fill, and you think, well, it's obviously too far now, I'm going to go short. And so you start hitting it short here. It's similar to that, of course, isn't it? It's wanting to get the money back on the trade. You start hitting it short there, and of course, the thing just carries on and on. You have got no structure to the trade. You don't know when your exit's going to be. You don't know this, you don't know that, you've got no target. You're just trading out of wanting to get those funds back, or missed funds back, and that's damaging as well. So flipping bias. Number 5 is not use it to learn from. In other words, this may well be just it is what it is. You've correctly analysed the market conditions. That should give you a big tick in the box. At the end of the day, if in this scenario, you've said, okay, I'm going to decide to buy a deeper pullback and I want to have an order here. This is the second best scenario. Best scenario is you get filled, you come back, you're up 150 ticks. Second best scenario is you've just missed your filled. Worst scenario is you've been filled and you've been stopped out. You completely misread it. So you're okay here. You've got something to work on. Now, if this becomes a theme throughout your trading, you might want to say, well, maybe I'm being a little bit cautious. Maybe I need to be a little bit more aggressive under certain conditions. What conditions do I need to be more aggressive on? Should I be staggering orders? How can I address this? Now, maybe it's not to be addressed. Maybe this is just an unusual thing that happened and it was stronger than you expected and that was the level you wanted. You weren't prepared to pay up any more than that. And that's a good way to be, because if this is happening to you regularly, it means that you're only taking the best trades. Yes, there's some adjustments and tweaks you can make, but what it does mean is that you're being thoughtful about it. You're not chasing up here like everyone else and getting stopped out down here. That's the beginning trader's first port of call, is to buy stuff here, come back and start getting stopped out where you should be looking to buy, where the rotation is ending back and continuing the trend. So if you're in this position, I don't know if this is just any example, but if you're in this kind of position, you've got to leave yourself a pat on the back and take the positives from it. Yes, you weren't in, you didn't come back, you weren't up 5 grand, you weren't up 500 quid, whatever order of magnitude you're trading, but there's stuff to learn from it. But the most important thing is you don't let it annoy you. Don't go to the market. You don't decide to just randomly trade another instrument. You don't move it. And keep an eye out for that video, guys, coming up about how we can move our limits if we miss it, how we look at price structure to make a confident movement of our limit rather than just on a whim. Don't flip bias deadly just to go, well, it's got to be too high now, it's going to be short, just out of frustration, and not using it to learn from. It may well be that it is what it is. But if we're logging the information, we're finding a theme over the quarter, over the month, over the 6 month period, then we can tweak and adjust. If we're not learning from it, we've just wasted the lesson. All right, guys, take care. See you next one. Bye-bye.